So allow me to welcome you to this brainstorming meeting, which, like I said, is intended to chart a way forward on how we collaborate to grow the pension sector. I'm very honored that you have accepted our invitation, and I'm happy to see such a large turnout of so many different schemes and players. As you know, the authority is mandated to regulate and supervise the establishment and management of schemes, protect the interest of members and sponsors, promote development of the industry, advise the Cabinet Secretary and National Treasury on national policy with regard to the industry, and then implement the government policies relating to it. So today we are here to discuss in particular one of those mandates, and that is the mandate of promoting development of the retirement benefit sector. And we consider you to be key partners to help us achieve this critical mandate. I think in the past we have made a lot of strides towards increasing coverage, but there are still millions and millions of Kenyans who are outside of the pension bracket, and we need to bring them in. And that is what we want to talk about today. It's worth noting that the industry has experienced growth in people contributing through the various options. The current ratio is at around 20% as of December 2018, the coverage ratio, which I know is high compared to most of the other African countries, but is still low when you look at the global average for middle-income countries, which are around 51%. For low-income countries, around 17%. For high-income countries, 90%. So our peers, because we are lower middle income, are at 51%, and that is where we need to be heading. So one of the main contributing factors for this low coverage is that a lot of the capital is in the informal sector. That's around 83.6% of employment, and therefore is not captured by the traditional schemes. We believe that individual pension plans will play a key role in reaching out to this critical sector. As you know, majority of schemes were formed with formal sector in mind. However, individual pension plans have flexibility to accommodate members of the informal sector. The missing link has been how to sensitize and convince workers in the informal sector to join the plans and start saving towards their sunset years. As a regulator, we have been doing our best to sensitize masses, but the ultimate goal of onboarding new members remains with the plans themselves, since they are the providers of the pension product. So like I said, at the end of the day, it is you who will bring on board the members, not us. One of the strategies we have employed has been through media campaigns, and we are currently running one in collaboration with Nation Media Group, which started around the beginning of this month, and will be running for the next 3 months until September 2019. Today, representatives from the Nation Media Group will shed more light on this campaign and provide ideas and ways that IPPs can ride on this and benefit from the initiative. Definitely the campaign shall ignite heightened interest from Kenyans who are yet to join pension schemes, and IPPs should be ready to offer options through which they can start saving. I therefore hope today's meeting shall offer key insights on how we can work together to reach even more Kenyans with the pension message and how to convert awareness into enrollment. In our recently launched strategic plan, we have prioritized increasing coverage from 20% to 30% by 2024. Excuse me. Therefore, we look forward and are open to collaborating with all stakeholders in the industry who are willing to develop products and schemes that will meet the needs of the Kenyan citizens. Going forward, we shall continue to invite you to join us in sensation events so that you can onboard willing members across the country. We shall endeavor to invite you all in good time when we plan such events. So as I conclude, let me just update you on the industry. As of December 2018, we had 1.2 trillion in terms of pension assets. And from what we have seen in terms of first and second quarter performance, particularly the first quarter, we expect quite some good growth when the statistics come in for March and June. Of course, these funds are invested in domestic markets, most of them, and contribute to the growth of the country. And we have always discussed with stakeholders and amended the investment guidelines to allow more asset classes, and we are seeing take up in some of the asset classes that we introduced. If you look at private equity, for example, it was 0 for a long time, it went to 0.05, but now it has reached around 0.5% of total assets. So it is growing quite fast. We had categories, for example, for derivatives, but the category was there before the products. But I think 2 weeks ago, we saw the NSE launching the first derivative product. So at least now we are seeing the capital markets catching up with guidelines, because our guidelines are pretty progressive and have a lot of assets, some of which have not yet reached the market. I think another issue that has been of interest to us is technological advancement and innovation. This week we had a big festival hosted by the Central Bank of Kenya and the Central Bank of Singapore. And we are very happy to see a lot of fintechs who are interested in doing innovation in the pension space. We have seen innovation in banking, be it in capital markets, but we have hardly seen much in terms of fintechs in the pension space. But now we are very happy to see quite a number of them there, some local companies, some international companies who are keen to enter that space. And I think that will be a key to driving our agenda. So we are ready to work with IPPs and other stakeholders to explore technological opportunities to help us expand coverage. You also may be aware, and I've seen it in today's newspaper as well, that the Cabinet Secretary, National Treasury, 3 legal notices number 87 and 88, did make some amendments to the regulations, the umbrella and occupational regulations, to extend preservation of benefits to include 100% of employer contributions. Previously, members could access 50% of employer contribution and 100% of employee contribution. Now, they will only access the 100% of employee contribution, but none of the employer contribution. I think this is a good thing because we have seen a lot of studies which confirm that pension adequacy is very low. If you look at the pillars of a good pension system, we always talk of security, sustainability, inclusivity, and adequacy. Now, if you look at security, we have really done a lot, put in place a very elaborate structure. You have fund managers, custodians, checks and balances. We have a very secure system. If you look at sustainability, we have a very sustainable system because we moved away from the non-funded system where we used to have schemes which were not funded, and now all the schemes are funded, apart from civil service, which is supposed to start their funded scheme from this month. So we have a sustainable system because the funded system and the assets are there and they are invested and so on. Inclusivity is what we are talking about, increasing coverage. We have been able to come from 12 to 20%, and we are now trying to get to 30%. So that is something we have been working on. The area we have failed in our pension system has been pension adequacy, because if people are getting only 30% replacement rate, 33% replacement rate as the studies are showing, then the system has let them down. I think a big cause of that low replacement rate has been frequent access, because people have always been accessing. The study show that 95% of people, when they change jobs, they take out all the money that they can. The only thing they leave behind is what the law doesn't allow them to take. Otherwise, they take out everything. And they don't take it out and put it into another scheme or anything. They take it out and use it for consumption and so on. So this has been the cause of our low pension adequacy. I think the step by the Cabinet Secretary is going to help us improve adequacy, which is the remaining pillar of our pension system. So I think that was a positive step. He also made some other changes with regard to reserving. He also extended post-retirement medical, so that it is also included in umbrella funds and so on. So I think those are very positive changes.